Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we are looking at Pinterest.
If you find our talks useful, please consider subscribe, like, and comment underneath.
And a quick note before we get into today's stock. If you need emergency cash and want to look at a short-term installment loan option, you can check out MaxLend Loans through my link below. Eligible customers may qualify for loan options up to $3,750, and funding may be available quickly if approved. But please be careful. Always read the full loan agreement, APR, fees, repayment schedule, and total cost before signing anything.
All right, let's get right into it with the hook. Picture this. It is the end of the first quarter of 2026. You are looking at a major tech platform that, honestly, Wall Street has essentially left for dead.
Oh, completely. Just written off.
Right. I mean, they had missed their earnings estimates for 5 consecutive quarters. The stock is just bleeding out. It's down roughly 20% year to date. And the broader market narrative is that this company is, just a relic of the past.
Yeah, the old passive digital scrapbook stereotype.
Exactly. Just for wedding centerpieces and kitchen renovations. And then the earnings report drops. Boom. The stock goes on an absolute tear, surging 20% in after-hours trading.
It is a phenomenal textbook corporate turnaround.
Yeah.
I mean, it completely shatters that old scrapbook narrative you just mentioned.
Today, our mission for you is to unpack exactly how Pinterest pulled off this billion-dollar quarter. We are going to look under the hood to see how they transformed from that passive mood board into an AI-driven visual commerce powerhouse.
Right, because the underlying mechanics of what they actually built are fascinating.
All right, let's move into the wealth building context here, because before we get into the heavy financial mechanics, I want you to think about your own experience on the internet for a second. Have you ever had a crystal clear picture in your head of something you want?
Like a specific vibe for a living room or a style of jacket?
Exactly. But you just cannot find the right words to type into a search bar. It's incredibly frustrating.
It's the classic, I'll know it when I see it problem.
Yes. And what we are seeing in the research today is how solving that highly relatable, very human frustration has turned into a massive wealth-building opportunity. But what is the actual moat here? Why is this so valuable right now?
Well, you have to look at the massive shift happening in digital advertising right now. We are entering the post-cookie world.
Right, because third-party cookies are dying.
Exactly.
Yeah.
For the last decade, advertisers relied on those little pieces of code to follow you around the internet, right? Watching what you looked at so they could target you. But privacy laws and browser updates are killing that off.
Yeah.
So if an advertiser can't secretly follow you around anymore, what's the next best thing?
Getting the user to just, explicitly tell you what they want.
Exactly. First-party data. And here is the most critical statistic. 100% of Pinterest's 631 million monthly active users are logged in.
Wait, 631 million, every single one.
Every single one. You literally cannot use the platform effectively without an account.
Which, I mean, as a user sounds kind of annoying, but as a business model, that is pure gold.
It's unparalleled. Think about it. When you go to a short-form video app, you're doom scrolling. You're just there to be passively entertained.
Right. You aren't giving them any deep signals about your life.
Exactly.
Yeah.
But your logged-in intent on Pinterest-like, what you are actively saving to buy, build, wear, travel to, that is the most valuable, untouchable data on the internet right now. They aren't guessing your intent based on a video you watched for 3 seconds. You are literally categorizing your future purchasing plans into neat little folders for them.
In a completely closed walled garden, a general-purpose social media feed just cannot replicate that. You don't go to a viral dance app to plan a $50,000 kitchen remodel.
No, you definitely don't.
Now let's look at the fundamentals, because the numbers backing up this story are just wild. Wall Street expected around $966 million for the quarter.
And they hit over $1 billion, $1.008 billion to be exact, which is an 18% year-over-year increase.
And their non-GAAP earnings per share, which, is that metric that strips out the weird one-time accounting costs to show real operating profit, that came in at 27 cents.
Completely crushing the 23-cent estimate.
But I have to push back here for a second. A revenue beat is great, but a 20% stock jump implies something structurally changed. Was it just a lucky quarter in their core U.S. market, or did something else happen?
It was definitely something else. The absolute engine of this beat was international growth.
Oh, really? Because historically, international has been a massive weak spot for them, right?
Yeah, a huge weak spot. They had the users overseas, but they couldn't squeeze a dime out of them. They were essentially running a global charity for inspiration. But this quarter proves they finally cracked the code. Their rest of world revenues, so outside of the US and Europe, surged a staggering 59% to $72 million.
Wow, 59%.
Yeah. And European revenue rose 27%. They figured out how to integrate ads natively in non-US markets without ruining the user experience.
That is huge. That brings us to the catalyst timeline. What is the spark that is actually turning all this global inspiration into actual transactions? Because the tech shift here gets really interesting.
It really does. Because having a walled garden of data is only half the battle. They actually have to weaponize it. And they are doing that through AI monetization.
Let's break that down, because AI is the ultimate shiny object right now. Every CEO is dropping the letters AI into their earnings calls. How is this different from just a better text search algorithm?
It's totally different because it's about computer vision. Pinterest is utilizing proprietary AI models, specifically ones called Omnisage and PinRack.
Yeah.
The AI isn't just reading the text tags on an image of a living room, it's analyzing the actual pixels.
Okay, so it understands the context.
Exactly. It understands the aesthetic context.
Yeah.
If you save an image of a velvet mid-century modern couch, the Omnisage model analyzes the texture, the geometry, the lighting, the overall vibe. It then instantly scans millions of shoppable products to find items that match that exact aesthetic.
Even if the text descriptions don't perfectly align.
Even if they don't align at all. It bridges the gap between your vague inspiration and the advertiser's actual inventory. And they package this into what they call performance plus AI campaigns. These are now driving 30% of the platform's lower funnel revenue.
Okay, quick pause for you listening. Whenever you hear lower funnel in marketing speak, think of a physical funnel. The wide top is just brand awareness, getting people to know you exist. The narrow bottom, the lower funnel, is the cash register. It's the direct add to cart action.
Right.
So you're saying a third of their direct purchase revenue is now being driven by the AI taking the wheel.
Yes. The AI is successfully predicting the exact variation of a product a user wants. And it puts the perfectly optimized ad in front of them at the exact right micro moment. Advertisers using these AI tools are seeing a 2x growth in their return on ad spend.
That is massive. They also executed a really strategic integration with their recent acquisition of TV Scientific. That's a connected TV platform, right?
Yeah, CTV. And the results there are crazy. One partner saw a 190% increase in incremental audience reach by taking these visual intent campaigns and pushing them to people's smart TVs.
But, how do we know this isn't just marketing fluff designed to boost stock? Where is the proof in the cash flow?
You find the proof in their forward guidance. They raised their revenue guidance for the second quarter of 2026, projecting between $1.133 billion and $1.153 billion.
You handily beat the street's estimate. I think it was around $1.12 billion.
Exactly. You don't raise the bar on your own future performance if your AI tools are just a beta test gimmick. The AI efficiency is actually showing up in the forward-looking cash flow projections.
Now let's pivot to the chart and the technicals, because the reaction here was violent. A 20% upward gap is staggering.
What's fascinating here is the anatomy of a market shock. The reaction was violent specifically because the expectations were so incredibly low. When a stock misses 5 quarters in a row, you build up a very toxic market structure.
Right, it gets heavily shorted.
Exactly. The stock becomes heavily weighted, with short sellers, institutional traders, betting money that the company will continue to fail. So when Pinterest didn't just beat the estimates but utterly crushed them, those short sellers panicked.
It creates a massive short squeeze.
Yeah, it's like being in a crowded theater with one exit and someone yells, "Revenue beat."
Yeah.
All those short sellers are forced to buy the stock back at the exact same time to stop their losses. That forced buying is what creates that massive upward gap on the chart.
So what does market sentiment look like after a move like that? Because it's one thing for the shorts to panic, but what is the company doing to sustain this?
This is where we look at their fortress balance sheet. They closed the first quarter with $1.3 billion in cash and marketable securities, alongside $312 million in free cash flow.
Now, a lot of tech companies would just, sit on that cash, or maybe buy a flashy startup, but management did something totally different here.
They executed one of the most aggressive share repurchases of the year. They bought back $2 billion worth of their own stock in just the first few months of 2026.
$2 billion in one quarter.
Yeah. They bought 109 million shares at an average price of roughly $18.
Wait, let me make sure I have that math right. By doing that, they reduced the total number of outstanding shares by 16%.
16% in a single quarter.
Think about the mechanics of that for a second. It's like having a pizza cut into 10 slices. The company just bought back and destroyed nearly 2 of those slices. Now the entire underlying value of the company is divided among the remaining 8 slices. Every remaining share instantly becomes more valuable.
And it is a screaming signal to the broader market. When management authorizes a buyback of that magnitude while the stock is sitting at its 52-week lows, they are essentially front-loading shareholder returns. They looked at their internal AI data, looked at the stock price at $18, and decided to basically back up the truck.
It establishes a massive floor of support on the chart around that $18 mark. And they still have, what, $2 billion remaining in their authorization?
Yes, out of a $3.5 billion authorization, they have the ammunition to keep squeezing the shorts if they want to.
And now let's talk about the risks, because no corporate turnaround is perfectly smooth. There are always roadblocks. What is the bear case here?
The primary bear case really hinges on macroeconomics, specifically global trade tensions and tariff headwinds.
Let's walk through the causality of that. How does a tariff on imported goods hurt a digital visual search engine?
It comes down to retailer margins. Many of Pinterest's biggest advertising clients are massive retail brands that import goods. If new tariffs are implemented, those retailers face higher costs.
Right.
And to protect their profit margins, the very first thing a retailer usually cuts is their marketing and advertising budget.
Yeah.
If the big brands tighten their belts, Pinterest's top-line revenue takes a direct hit.
That makes perfect sense. The ad budget is always the easiest lever to pull. The other major risk I saw in the research is internal disruption. The execution risk here is very real.
Oh, absolutely. In January of 2026, just a few months before this blowout quarter, they went through a major restructuring that cut 15% of their workforce.
15% is huge. And they are simultaneously in the middle of a massive sales team reorganization under their new chief business officer, Lee Brown.
Right. When you rip out 15% of your staff and completely rewire the leadership structure of your global sales team, it usually causes near-term chaos.
Yeah, progress is rarely linear when you are basically rebuilding the airplane in mid-flight, especially as they try to scale those complex international markets.
Those are entirely valid concerns. But if we look closely at the data, we see some incredibly strong mitigating factors. Let's take the tariff and retailer pullback risk first. The data shows that if you exclude the specific large retailers who actually did pull back their spending this quarter, Pinterest's underlying revenue growth actually accelerated.
Wait, really? So the rest of their advertising base is growing fast enough to just absorb the shock of a few mega brands pausing their campaigns?
Exactly. It proves their revenue base is successfully diversifying. They aren't overly reliant on just a handful of big box stores anymore. And as for the internal disruption, the layoffs and the reorg, the fact that they beat Wall Street's bottom line estimates by nearly 24% while undergoing a 15% workforce reduction is amazing.
It's the definition of operating leverage. You know, getting significantly more output from a much smaller cost base.
Right. Their adjusted EBITDA, which is basically their cash profit from operations, grew 20% year over year, maintaining a very solid 20% margin. It strongly suggests that those AI tools like Omnisage are doing the heavy lifting now, rather than relying purely on human ad sales brute force.
So with everything on the table, what is the final verdict?
The consensus gives Pinterest an 8 out of 10 bullish score. The narrative has fundamentally shifted here. They've successfully transitioned from a passive digital scrapbook into an active, highly profitable, AI-powered commerce engine.
And what's the time frame on that view?
The research targets a 12 to 18-month structural growth horizon. This isn't just a quick trade based on an earnings pop. It's a multi-year investment view on how visual search is monetized globally.
And for you listening, whether you are an investor looking for the anatomy of a successful tech turnaround, or you are trying to figure out how the ad landscape survives the death of third-party cookies, this is your blueprint.
Absolutely. The companies that have highly engaged, logged-in user data paired with predictive AI, that is the new gold standard.
Which leaves us with one final kind of provocative thought to mull over. You have an unparalleled data set of 631 million logged-in users signaling exactly what they want to buy.
Yeah.
You have proprietary AI computer vision that actually works. And the stock is still in the early stages of a historical recovery.
Right.
How long until a much larger tech titan, say an e-commerce giant or a mega cap search engine, looks at Pinterest and decides it is simply cheaper to acquire this entire visual commerce engine outright rather than trying to build one from scratch to compete?
Now that raises an important question for the coming year. It's a very real possibility.
It definitely is. Need emergency cash? MaxLend Loans offers short-term installment loan options up to $3,750 for eligible customers. Apply through the link below and carefully review the APR, fees, repayment terms, and total cost before accepting any offer.
And if this episode helped you, please subscribe, like, and comment underneath. We'll see you in the next Smart Wealth with Joshua episode.